So, hello everyone. Let me introduce Mr. Bhuvan Gupta. He's the founder and CIO of Client First Capital. He's a true entrepreneur from his thoughts and beliefs and understands the business on the ground really well. He's having a more than a decade of investment experience, specialized in the US, Middle East, India, and the China markets. He's a disciplined investor following the Warren Buffett, Charlie Munger, Peter Lynch style of quality and growth investment, right? For me, he's my college senior, mentor, motivator, and last but not the least, the friend to discuss the investment ideas. So recently, Bhuvan has visited Omaha and have a face-to-face experience of Berkshire Hathaway annual conference. So let's begin and hear from Bhuvan his experience about the conference, right? So Bhuvan, to start with, Simon, the Simon Sinek in his book Start with Us Why said, right, like always understand why the people are doing certain things before understanding how they do it and what they do it, right? So even I just want to understand your why. Why the trip to Omaha? What's motivate you to visit Omaha, and what are the learnings that you want to share with us?
Right. First of all, thanks a lot for the wonderful introduction. I think it's late in Singapore, and I'm very delighted that you have so keen about my Omaha trip and investment as a whole. So, see, Ash, it's very simple that as all of us, let's say, do exercise every day, right? Or we have to do exercise every day, or let's say we all understand that we have to do some part of our life as sanitization. So Warren Buffett is like the one person, everybody, I've read so many books, everyone will refer either Charlie Munger or Warren Buffett in their books. And they are now 91 and 98. I've been trying to see them in person from last 3 years. I'm sure you remember in 2018, I talked to you about this. And then
Yes.
COVID came in and I've been listening to him online. So there's a one very good saying that if you would like to learn something from someone, it is very important that you stay close to him, you spend a lot of time with him. You also agree to me that yes, Zoom or digital conferencing is a great way of talking or communicating, but what you get by being in that aura is absolutely different. It is like asking a Muslim, why are you going for Hajj every year when you know the God is in you? It is like asking a Hindu that why are you going to Tirth or Mandir when Bhagwan is at your home or at your heart? Similarly, I have been hearing and reading about him a lot, but it's not easy because these things are mind-boggling. They require a lot of attentions. It is not like a 1 minute. It is a 9 o'clock or 8 o'clock to roughly 5 o'clock affair, which is roughly 8 hours. And I can tell you it was not easy there also. So once you would like to have a change in your life for good, you need to be close to somebody who has adopted this change for roughly 40 to 60 years of his life. I'll say he's investing from 11 years old. He's 91 now. He's 80 years old. So it is very important for all the value investors to visit Omaha. Many of us have the US passport. We all are doing investing, but there is nothing close to not going there and learning. So the whole idea to make a lot of friends, understand what the man is doing or what the man are doing, and how I can inculcate that in my life. And the most important thing is to promote this freely to all my investors, because this is something not happening. And all of us are in our life, whether we like it or not, we have to invest. Every day or every quarter or every month, we take an investing decision. So my visit to Omaha was like a pilgrimage. And I'm sure because if you see, he recommends a book, right? Everything is online. I am not that elevated that I can do everything sitting over here. So as I have been telling you also, next year, I will request you to come to Omaha and see yourself. Then I'll ask you, why do you think this trip is worth going there? So I've made a lot of friends. I met them individually, which could have not happened online. So that's my 2 cents on the question you asked.
Well said, Bhuvan. I do understand. Watching a cricket match on television and live on the ground, it has have a different experience. So I can relate to your thoughts, right?
Thank you.
So, Bhuvan, if I ask you, what are your three key takeaways from the Omaha trip? What are those? Just want to highlight a few things.
So one of the most important thing is what I've learned is Warren Buffett has a cult. He's the biggest showman available on earth to all the investors and business people. People who don't love sales, let me tell you that Warren Buffett also one of the biggest salesperson available on earth. So how I will tell you this. So we were sitting in that conference, and after the lunch, there was a shareholder meeting going on. And Warren Buffett just came on the stage and with the what do you call the agenda of the meeting, and he said, "I just came to know that we sold 15 boats." And I said, "I don't mind you guys going out and do shopping. They sold roughly 10 tons of sea candy chocolate." The person has an eye for business, and he has exactly what's happening outside the business. They have an exhibition outside. So let me give you the whole background of the whole conference. So there is something called CHI Center. It's Health Center of Omaha, which is basically a big auditorium. And people sit on the top, they sit on the ground. And Warren Buffett and Charlie Munger, Greg Abel, and Ajit Jain, they sit on the stage. And you have 3 big TV screen. And people are shopping left, right, and center. 5:30 sharp, they close the shopping center. You can't buy anything. People bought so many books that I couldn't get a single book there, and I had to buy from some other shops, and I'm still buying those books. People bought chocolates in loads. People bought kitchen stuff, and these are all brands you would have not even heard. So that's one thing. And then next day morning, 5 o'clock onwards, billionaires, not millionaires, millionaires and billionaires were in the queue at a temperature of roughly 8 to 10 degree to get inside, to get a seat close to Warren Buffett and Charlie Munger. We were a little lazy. We woke up at 5 o'clock, but we only got down at 6 o'clock. We were also in the queue for roughly half an hour before we reach inside. I happened to see Tim Cook, who was just passing by. So Tim Cook and our dear Microsoft ex-chairman Bill Gates was there as well. Bill Murray is also an investor there. He was also there. And then we entered, and 8 o'clock the show begins with a story. So this is all about him. So coming to the learning, the first learning is that people love him. So if you need to become a great business person, your shareholders, your owners should love you. That kind of quality he has. So one quality which I'm going to imbibe from him is that integrity should not be questioned. That's very important. The second thing I learned in that what Warren Buffett is doing is basically a very simple thing. He's buying these great margin business, great quality business as a subsidiary of Berkshire Hathaway, and he is holding these businesses for long. So the second thing is he's doing a very simple thing. He's buying these companies which are selling cash, which are selling product. We are at a high margin, and they're selling quality. The third thing I learned about that Warren Buffett is smart, but Charlie Munger is smarter. So this is something I now, since I went there, I will learn more about Charlie Munger, who is a 98 years old guy, who is celebrated in the world that he has got a 30-second mind. In 30 seconds, he can analyze anything and tell you. So I learned about these 3 things in short.
That's great, Bhuvan. So even my next question is around Charlie Munger versus Warren Buffett, right? So as we all know that Warren Buffett, in his early career, he's a cigar butt investor. Like he tries to find the value, and his focus was not on the quality side, right? So once the intrinsic value is met, he just sold those holdings, right? But he has evolved as an investor, right? So I would ask, like, where are you inclined towards? You are inclined towards the Charlie Munger type growth, value plus quality, or you are inclined towards the Warren Buffett initial days where he was totally focused on the value, right? So what's your thought process goes around?
So we are both. If you ask us, we made a lot of money from the cigar butt kind of a strategy. So we basically bought a company called Denos Shipping and oil mining company called Continental Resources, and we made a lot of money for our clients. It doesn't mean that we have not made money from the quality companies, but eventually Charlie Munger is right. We also would like to own the quality company, and we want to buy them maybe at a little higher price. I have become a bargain hunter. But what Charlie Munger is saying is absolutely correct. And the moat is most important in this crowded world. The most important for any business, because if you look at S&P 500 history, if in the last decade or last 2 or 3 decades before, if there were companies staying in the S&P 500 for, let's say, 30 or 35 years, now the average span for a company to be in the S&P 500 is not more than 12 years. So the whole idea is that if you are not having a moat, you will collapse. So we are obviously of a thought process, more of a Charlie Munger side, but it's not easy, Ashish. People think that it is easy to change, but it's not. So today we are both, but majority of our portfolio is tilted towards the quality side now. So quality at a little higher price is absolutely fine, but cheap is not cheap. You might lose all your money. So we are more tilted towards the Charlie Munger side of business, which is buying a great business at a average price.
Great point, Bhuvan. Like, even I feel that it's not easy to adopt any one sort of investment style. Like, going back to the Warren Buffett and Charlie Munger's thought process on the tech stocks, right? Like they kept themselves away from the tech world for more than a decade. And if you see their current portfolio, Apple forms 40% of their portfolio. So we all have to evolve, and that's a good point, Bhuvan. Thanks for that.
Ashish, here I would like to also add, Apple is a consumer company. So think from that perspective. How 90% of us are not even using the full feature of the phone. Apple has become like a need today.
Understood. But even if you see the latest buying that they are doing, so I was seeing the list of buying that they have done in the Q1, and some of the tech world stuff comes in. They have bought HP as well. They have bought a video game company. I cannot recall on top of my head the name, but yeah, they are inclined towards some stuff that they were not used to buy in the past.
So Charlie recently said that we understand technology. So I just would like to just give you
even Amazon,
yeah. So they understand technology. It is not that they don't understand, but obviously more even Amazon for that matter is also basically a consumer company. If you see, these are the companies you can't live your life without even using them for a day or two. So technology is definitely something which is changing day in, day out. But I think Tesla is a better company when we talk about technology, because Apple has, like, right now we are working on this Apple laptop. The only reason I buy this laptop or the MacBook Pro, because of the battery life, and because there is a perception, which is not correct, that this doesn't hang. And one thing for sure, I think a lot of us agree that Apple, the screen resolution are much better for eyes. So I ended up buying Apple for all my children and my wife. Maybe I will use something else, but then eventually I realized that once you use Apple, it is very difficult to come out of that thing, because Apple is first mover. They are always moving ahead. So technology could be a play, but most important thing, it's a consumer demand.
Okay, got it. Thanks for the explanation, Bhuvan. My next question is around, since we are talking about the consumer, Bhuvan. So my next question is around the behavioral aspect. In the recent past, we have seen a correction around 10% in the market, right? And it's a big correction in the US market. The same goes for the Indian market and the other global markets as well, right? So and even I just quote Warren Buffett. He said that stock market is a device to transfer the money from the impatient to the patient investor, right? Uh, but the problem that we face as an investor is it to say how to is it to say to think long term, right? But how to think long term, right? Can you give some tips to our audience, uh, like how can an individual investor can think from the long term viewpoint and have that mindset, the long term mindset, how to build that?
Okay. So just now I told you that I visited Warren Buffett. That is one way of you can make a long-term thought process. For example, when I tell people, let's go to US and meet and attend Warren Buffett's webinar or seminar, a lot of people give me a look. So they they tell me all kind of excuses. They will tell me who will go there. We have so much of work here, etc., etc. So what I'm trying to say, first of all, understand that if you have to create a long-term outlook, you have to have long-term habits. For example, I do karate. Now, karate will not finish in 6 months or one year. It will take at least 5 to 8 years when your body will adopt to the lifestyle of karate. So so choose something which is gonna be a long-term thing. For example, I want to write a book. Now, writing a book is not an easy job. I'm sure one day all of us will write a book, but writing a book is a long-term hobby. Or let's say spirituality. A lot of people would like to go through, let's say, the granthas like Bhagavad Gita or Quran. It is not going to happen in a day. You have to spend at least 5 years when the Bhagavad Gita or the Quran will go through you. The whole point here is that to develop long-term habit, you need to do long-term, you have to have long-term goals. Now, many people, and I will say from my experience that they don't even know what they want to become in, let's say, next 5 or 10 years. So the whole idea is to have 5 or 10 years long-term goals, break down them small goals, and keep doing it. For example, why do we do these webinars? Because we have a goal to have 100 webinars done for our clients or our investors so that they can get money education. So the whole idea is very simple. Day one, we chose 100 videos. Now, 100 videos will take at least 100 months because every month we do only one webinar. Every webinar, you need to have that experience. So it's very important that you choose a long-term goal and then you break down the small goals and you start doing it. Now, we also write, and I am not a good writer. I'm still writing. So when you write, you evolve. So the thing goes in my mind that now I have to take a writing course. Why? Because the end goal is to at least write 2 or 3 books. So it's a very simple thing, Ashish, that long-term goal. Let's talk about life here also. If I make $10 billion also, what will I do of it? Once you start understanding those proportion in your life, you will realize that money is only a means. A lot of people tell me, I don't want to make that much money. I'm not greedy. But they forget to understand that greedy people don't make money. What does that mean is that they might make some millions, but then they will be like what has happened to people who have foresters, or they have left India for forever for bad. So it is not a journey of money. It is a journey of good habits. So long term can only be inculcated when your incentives are long term oriented. So parenting is a long term. If you want to become a good parent, can you become in a year? You can't.
No.
So you need years to make sure everybody of us is trying to become a good parent. And we all understand this. A business for that matter. How many of here who can tell me that in a year I'm a successful businessman? It takes decade, Ashish, for a businessman to just understand what business is. And then so much money he makes. But by now he realizes that it is not easy. So long term, even very simple thing, Ashish, why do we buy land and hold it for 5 to 10 years? Something is there, right? But in the stock market, when we come, we want immediate gain because probably we understand land investment. We don't understand stock investments. So long term will only happen when we'll have long term habits, long term vision, and will take turn. But in the stock market, everybody wants to make money quickly. That's a puzzle to me also right now, and I am trying to find out that why people are looking at stock as a short term. Maybe they don't understand it. Rest is history.
That's a good point, Bhuvan. You take an example of the land and the stock, right? Stock prices I can always see on a daily basis, right? And the land prices I cannot see them on the daily basis. And like not seeing the prices on the daily basis helped me to not sell or look at the land. And this is how I hold the land for the long term, right? But somehow the stock market. Looking at the stock market and the price are quoted on the daily basis, that shifts my behavior. But yeah, I get the point that we should not focus on the short term goal. Good things always takes time. So well said. Okay, let's talk about the markets, Bhuvan. There are a lot of happening in 2022, right? So I was collating some data around the US markets, right? So in the last decade, from 2010 to 2020, US market has given a CAGR of 12%, right? In terms, and US market was the best performing market in the world in the USD term, right? That's the data on the table. In the last 7 decades, US has seen a lowest inflation. The inflation was around 2 to 3%, if I'm not wrong, and that is the lowest inflation the US has seen in the last 7 decades. The theme of the last decade was the asset-light company, the tech-focused company, right? Now, in this decade, starting 2021, things are changing, and the consumer behavior is shifting. The outlook of the inflation is different rather. So what do you think about the US market for the next 10 years, right? Where will be the inflation? What can be the expected stock market return? And what will be the theme? The last decade theme was asset-light companies, the tech stocks. What will be the theme for the next 10 years? Will it be a metal? It will be a commodities. What will be the theme for the next 10 years? Can you please throw some light on this?
So, Ashish, I'm not a macro expert, but since to cut the noise, I need to know the macro as well, and I read about it because as a student of Warren Buffett School of Thought, my whole interest is to get to know what my company is doing. And I should leave this to the businessman who is basically very smart, and if he's getting any problem somewhere, he launches a new product of new service. So let me talk about the companies which will get successful in the next 10 years. So if you notice, I don't know whether you know this or not. So let's say we also use Zoom, and we also have the Zoom software as a portfolio holding company. Now, when Zoom came in starting, if you remember, anybody could have entered the meeting with the meeting number. Today, that's not the case. There is a lock available in the Zoom room. There is a waiting period. You can actually put people on the wait. And Zoom has also now have a security feature. There was a blame on Zoom that Zoom has every call is routing through China. So right now when we're talking, China is listening to us. But then Zoom has given you option that you can route it the way you want. Zoom also tells you that how it is encrypted. Now Zoom has also launched something called Zoom Reception. Zoom has also launched something called Zoom AI, where when we are talking to each other, they are going to give us that what worked for the salesperson, what particular cliche or what particular idiom or what particular word or phrase has worked for the salesperson, and the whole industry or the whole company can learn from the best sales calls. So what I'm trying to say, the companies which will survive for the next 10 years, the companies which will be able to innovate. If you would have read Andy Jassy, who's the Amazon CEO, the current CEO, is his first shareholder letter, he has used this word 5 times. So innovation is the key for the next 10 years from here. A company which can innovate. For example, when Elon Musk talk about a robot in the American household as a housemaid, it makes a perfect sense to me, because the only reason American like Dubai or let's say India, because we get house help. So very good thing somebody told me that Bhuvan, this might not be the case in Dubai also in the next 10 years. So we'll all be educated. Education will become a commodity. We all would like to have mental labor and not physical labor. Physical labor will attract more money. Like in America, a truck driver attracts $12,000 and he inaugurates his house and people go and do it. So our IT friends, and you also have the common friends, they go to their houses for inauguration. So in America, anybody who's doing the physical labor, he gets more money. So the next 10 years belong to the companies which will be able to innovate. Now coming to asset light and technology, etc. The most important aspect in my simple understanding is, if you are ahead in the game, if you buy credit and sell cash, I'll give you a very simple fundamental of investing. If you are buying credit, selling cash, and you have the brand power, you will survive. For example, Brooks shoes or Seas candy or Skechers or Nike or LV will survive the next 10 years. So when you go to an Amazon shop or an Apple shop and you want to buy an iPhone of, let's say, 12, or you want to buy Amazon Alexa, you don't get the old product. Every 6 months or 1 year, they launch a new product. So the companies which are able to innovate, they will survive. Now coming to metal, in my opinion, metal and commodities together have a very short cycle, because nobody can handle these pressure for 10 years. Already prices are skyrocketed. Once the copper goes to the roof, then turns the table, and the gold and silver mining companies, or the gold and silver goes up. They have a very short-lived cycle of 3 to 4 years. And from there, they come down and everything gets normalized. So in my opinion, that metal for the next 10 years is a wishful thinking, because at the end of the day, more the metal price, some innovation happens. So I'll give you some examples. So lithium ion batteries are in demand, right? You know this. But the moment lithium ion battery becomes so costly, or lithium is not, they are not able to mine, there will be some other metal they will find which can do the job. And eventually that metal will lose the charm. So this is how the whole innovation thing plays out. For today, let's say oil, right? Oil is a commodity, right? Now oil is also at 112 right now. I totally agree to your point. So in a short term, we could be bullish, but in the long term, oil is not gonna touch more than 70, 75 level, because we'll have solar power, we'll have EVs, we'll have buildings with solar walls, solar roof. I'm sure we know that Elon Musk already has a solar roof company. So the renewable energy will take a big chunk. So it could be a good sector to look at. But are they having a commodity mindset, or are we going to buy a company which is basically innovating a product in that renewable energy space? So sorry for a long answer, but it's very difficult to say. But these are the more important thing than chasing a domain, that asset light, or this asset light is always good, but sometimes you have to heavy capex. So for example, we have a company which owns land. They own so much of land, and the book value of the land is $1 billion, and the market value is $6 billion. So it's a asset heavy company, maybe in your opinion, but this company has done wonders in the last 10 years. It is 20 times. So of one particular theme, very difficult to say.
Okay, thanks. So how about the US market, Bhuvan? As I said, right, 2010 to 2020, the market return was 12% CAGR. It is one of the best decades the US has seen ever, right? So what are the expectations for the next 10 years, considering the inflation is high in the US, right? And as of now, the theme is somehow related to the commodities, as well as there are certain Cold War kind of scenarios, right? So are you saying that it will be a stock pickers market for the next decade, rather than having finding the opportunities at any sector, or what's your thought on the US market as a whole for next 10 years?
So I am still bullish on the US market because of the fact that US has a cultural advantage. So let's talk about China today. China is the biggest exporter to the world. Do we agree? Chinese economy has also surpassed the US in terms of GDP. And where is the market today? Depressed. Maybe a temporary phenomena, but I don't find that Chinese government has a very businessman or let's say the business friendly policies. All they want to do is to export to the world. And very few friends of yours and mine are in China. Do we agree? They're also not close to the English language. In the world, more or less, English has become let's say even right now also we both are talking in English. So Angrezi Bhasha एक प्रकार से standard बन गया है. And throughout the Indians, everybody is speaking English. Do we agree? All the software, all the systems are in place in English. So English language, that's one thing where China is not able to conquer the world in the next 10 years also, because they have not adopted the others' culture. They all want to sell you goods. Now, America as a culture is a culture of giving. I'm not saying that India is not, but America is a culture. So one gentleman was sitting here with me. He's a board member of our company. He's telling me, you know, Bhuvan, what works in America? The truth. The moment you lie, you're out. So in America, it's all about trust. People trust each other. So my mentor told me, Siddharth told me that when I was going for a meeting to somebody to guide him, he's asking me on the phone, sir, how much will you charge me for the consultancy? Should I bring cash because you might not have the bank account? So he's telling me I have never heard these kind of things in the Asian economy because people here want free advice. But Ashish, advice are never free. They're always paid. And that is what the American culture understands. I myself have given 20% tip. Tip is added on the restaurant bill. My friends have now become part of that culture. They also want to give tips. Tips are compulsory. In a lot of our friends, you will wonder to listen to that. They have become barbers. So I said, why are you cutting your children hair? Well, who will go to the barber shop? We have to give compulsory tip. But people who have become a little richer than this, they have understood that it's the culture. So the culture is helping to innovate, Ashish. And who is going and innovating? Same Indians and Chinese. So somebody was telling me today, I was sitting with somebody, said China has a 10-year backlog for green card in America. Now, I don't know whether the figure is correct or not, but all our Indian friends are dying to get a green card in America. So there could be an issue of maid or something, and I'm sure US will solve that as well. So US is a country which is opening, which with both the hands is inviting us. Come be part of this country. I know at least 30 families who are doctors or of different profession. Their children have taken EB3 or EB5 for their children by investing $500,000 in the American economy. I don't know whether UAE or Singapore is offering all that. But what I'm trying to say is that this country is allowing all of the world to come here, explore, and you get seed funding. Unless you will get seed funding, unless you will get the VC funding, how will you grow? So I hear a lot of people talk about it. So India is definitely a good market. I'm not against India or China, but American culture is all about capitalism. Will you believe I visited a cave? This cave is owned by a private entity. So my friend educated me that the whole America is run by corporates. So when you have this kind of culture, you are promoting innovation. America will definitely be there for next 10 years. And America is the only country which prints money, because as per the economic policy, if you print money, your currency has to depreciate. This is the only country in the world when this prints currency and the currency goes up. So just to give you a thought here as well, America was a net importer country on the oil. Now America is not exporting oil, but America has become the second largest producer or the first largest producer in the world, which is producing oil. So Shell was not heard 20 years ago. They got Shell innovated. They got horizontal drilling innovated. The cost was $100. They've brought down that cost to $35 per barrel. And now they are producing oil. Now, do you know how America started? America started because of gold rush. So in 1849, America developed because a lot of gold were found near San Francisco in California. I'm reading all these in the books. So all I'm trying to say is that anything can happen the next 10 and 20 years, but this is the country of innovation. Now, everyone know that America was not the premier car market, a car manufacturer. It was Japan. And look what happened. Tesla came out of the US and has become one of the largest car manufacturer by market cap. And the way it is leading the way, I think it is the only company which will be innovating. It's become a leading company in the electric vehicle market. So innovation is key. Elon Musk, Jeff Bezos, you talk about Mark Zuckerberg, you talk about Steve Jobs, they all would have come from outside maybe, or maybe not, but they're all flourished because of the economy gave them that innovating tool. They gave them the freedom to do it. Why Indians are still going for masters to America? They tell me that in IIT, we have to only mug up and get the MTech done. So it is the culture, and the culture builds in over decades, over century. So I believe America will be there. And coming to company, Ashish, any company's owner is very clear. He wants growth, 15-20%. Every shareholder wants 15-20% growth. So if I cannot make money from America, I'll go to China and bring dollar back. So if you look at KFC, they went to China called Yum China. If you look at jockeys, they went to India and they started a page industry company. If you look at Pepsi, they went to Varun Beverages in India, and Varun Beverages is throughout the India. If you look at Domino's, which is one of the biggest chain in India. So what I'm trying to say that company could be in America, but money can be made from any market.
Well said, Bhuvan. Your explanation reminds me one of the Warren Buffett's quote: "Never bet against America." So let's move on.
Don't bet against India also. Yeah.
That's what my next question is. No discussion is complete without discussing India. Yes. So I was doing some sort of stats analysis, Bhuvan. Again, coming back to the last decade from 2010 to 2020, Nifty return in terms of US dollar is just 3%. That is CAGR in terms of US dollars. And in terms of INR, the Nifty return says 9.3% CAGR. Right? In the last 45-year history of Sensex, this decade has given the lowest return because of the several reasons we all might be aware of. It may be a political reason. It can be we can blame it to COVID. We can blame it to inflation. We can blame it to the demonetization. We can blame it to the GST, right? But now the people are really bullish about India's future for the next 10 years, right? The commentators are saying that the foundation has been laid in the last 10 years, and India is ready for the secular bull run for 10 years. And if you see the per capita income of India is just merely 2,000, whereas we are talking about per capita income of USA is around 60,000, right? So it's a huge gap, multiple folds. It's 30 times less than. So what's your view on India for the next 10 years, Bhuvan? And what will be your hunting ground, if at all you are investing in India?
So first of all, in India has a very bright outlook because again, the culture is set or getting set. We are a little bit disturbed right now. Obviously, I'm sure you know what's going on. But from the government side, I think government is very clear. And we all have now become rich. We all have now, because earlier we used to not pay tax. We used to use, we used to what called electricity theft. We used to, we were like not paying the proper prices, but now we have changed. Suddenly we have realized that time is money. In India, time has become money. The IT people have become very rich. The people who are into manufacturing, they have realized there is no point undercutting, because people are getting income tax notices for even 12 years before. If they have done something, they're getting the income tax notices. So a great job done by government of India. So I'm very, very happy for that. And I feel that this government is stable. They have a lot of leaders who can take over. So India is absolutely set. India has got resources. India has become aware of a lot of things. You will believe or not, this 8 years have brought a lot of good things. The villages have become very rich. Poor people have started having the bank account. I will be repeating all those things which you've been hearing. But so India is a great market. Oil import bill is the only issue which we have. Because of that, you are right now the CAGR which you're talking about. Because if you take down the currency back to 68, so probably this will be a 5% dollar return. So currency is the reason is oil, and India is still importing oil. Now, leaving that equation aside, because I can't comment that if India will have shell or not, because the shell technology, whether India has it or not, I have no idea. But if we look at the renewable energy for the next 10, India is by the way cheapest in terms of renewable energy also. So India's renewable energy cost is the lowest. It is 2.35 paisa rupees per unit if you talk about the solar energy. So India has a great human power advantage. We speak great English language. We are very ethical. I think that we are loved everywhere. By the way, just to give you a common knowledge, America is a very big India as compared to what UAE is, and they have done wonders over there. So all of these people to chase growth will definitely come back to India market, or they've already come back to India market. So we have also opened a back office in India with 5 people. So I feel India is a great market, but the most important thing in India is this cash money play, and I'm sure it will also slowly and gradually come down. So laws have to be enforced in a good manner. Then India is a great place. Having said that, Ashish, India, we have made money. If you would have invested in India in a great management, people have made money. So there's a company called InfoEdge. If you look at, they are a great ID play. So I'm not recommending the stock, I'm holding the stock. So all I'm saying, India is now becoming a consumer. And since India is becoming a consumer, there is a plenty of place where you can make money. So invest in a great franchisee, which can have a great brand pull, because when it comes to the consumer, there is no one which can beat India. So you talk about Bombay alone is a very big city, or big, let's say, it's a very big market if you ask me. But now the wealth, so in India, basically we have wealth pockets. But now, since after the technology evolution, I think this is going into the tier 2 or tier 3 also. So even in the cities like Raipur and Indore, you can get whatever you want. So India is a great market, in my opinion. I will say that what theme will work in America this year, same theme will work in India also. People are launching IT, PMS, ITAF. So the companies which are basically part of the, let's say, information technology innovation, because now all Indian companies are also looking for software. I wish we ban Twitter, we ban Facebook, so India can also launch their own product. It looks very awkward, but that's how China has grown their market. So they have copied these products, but they have banned, let's say, for example, Google, they have banned Facebook, they've banned WhatsApp, and that's how their home markets have grown up. If you look at the very sad that Indian people, the Indian language for an operating system came very, very late. So in a nutshell, India is now definitely a great market to invest in. Having said that, if your company can make you 15-20% return, irrespective of where does it stay, because you can have an Indian company making money from the American market. You can have an American company making money from the Brazilian market. So when you talk about as a whole, I think Sensex, the dollar and INR ratio for the next 10 years is gonna mimic China. So I don't know whether you know this or not. Chinese currency in the last 10 years has not depreciated against dollars. And 1996, China and India was the same place. So I strongly feel that next 10 years, India will be mimicking China. So our currency should not depreciate. That's what I think. That's what my view is.
Sure, Bhuvan. So what are the themes that you're looking at, right? India being a consumer economy, 1.4 billion people, as of now, we are just talking about the roti kapra makan, right? Once your income rises, there might be a exponential spending happening uh, uh, in Indian market, right? So which are the hunting grounds or the themes that you might be looking into to invest? One theme you have already called out, that IT can be one of the theme, right? What are the other things, and what is your view on the consumer play as well?
So IT, when I say IT product, IT services, we have already made money. So you talk about Infosys, Wipro, TCS, all these companies have already become very big. But now we will be consuming our IT products because we have been consuming the products from the American market. So now we will have our own laptops, we'll have our own phones, and this company will be listed, and we will be buying those companies. We'll have our shoe brand, like we have only Mochi right now, which is not listed, I probably. So, and Liberty is a very small company. So we will have these kind of companies. So we'll have end consumer products, which will be localized for the Indian market. We'll have this contract manufacturers, like for example, Dixon. So we'll have these companies who we will be assembling or manufacturing chips, which is not the place. Then we'll have an electric vehicle play, which right now Tata is leading, and Tata's CEO has changed completely. Maruti will definitely be one to look at. We have a lot of this EV scooters coming in now in India because India is a big market for two-wheelers. So even for that matter, one can look at Bajaj, one can look at Hero or Honda, because these companies will also eventually play the electric vehicle game. India is a huge market, Ashish, and you don't have to invest one or two companies. You can invest in the best of the lot. So this is what is one thing I can tell you. Then I am not a very big fan of renewable energy commodity company because the problem is that price keeps going down here. So unless and until we start in that, because so a lot of people have told me invest into renewable energy, but my only thing is what is the brand recall? So that's one thing. So looking at the whole Indian market, this is one theme you can look at. Then there is a mechanized farming. Farming is a big. If you ask me, farming is a big segment. Which is so in America, the if you ask me, American market, 82% farming is mechanized. So India, I think the farming is a great sector. Chemical fertilizer market is a big sector. So anything which is rural theme oriented, gonna be something what people should look at. So we don't have much about India because we don't invest, but I have this personal stocks portfolio of mine. So for example, online gaming, it's a great place for India now. So what has happened in America, like Amazon, Twitch, similarly, you will see a lot of these companies coming in India. Second thing I also want to tell you that Netflix is struggling in India. I'm sure you know that. So Netflix is struggling in India because the content creators are very creative in India, because India has a deep heritage when it comes to, let's say, the movie creation. Look at India is the, I think, only market where you have at least 4 to 5 what Tollywood and Bollywood, and then the Chennai people, and then this is not there. It's unique in India. So each of them can create wonders. So for example, America, we've only spoken about Hollywood. Here we have this local Hollywoods, every about 500 kilometers, we have this big space. So you might look at an OTT player also. The way Hotstar is coming with, I think Hotstar with Disney, I think. So these are the plays one can look at. I will not be able to comment whether they are listed or not, but IT has a great role to play. So logistic is also one thing very important. So I heard about this very important thing, that logistic is a nightmare in India. So infrastructure, logistic, because whatever has happened in infrastructure earlier was all goofed up because of corruption. But what is going to happen now will be a great infrastructure play. So this is also one theme one can look at. India also doesn't have airports, but my knowledge is very limited. So even a lot of airports are coming in India. Infrastructure is a great play in India. They are not very quality developers. Let me also tell you that developers, there are more than 82,000 developers in India. Roughly 10 to 15 developers, if you ask me, are the honest and they have desire to become bigger. these developers will come and get listed. So instead of buying property, one should buy the real estate developer stocks. So you will be actually playing the India growth story in terms of, because India needs a lot of high-rise building. Dubai has many high-rise building. I think India has hardly 4 or 5 cities where they have high-rise building. India's requirement is lot of high-rise building because of the population. You can also play a theme of water in India, because even I'm sure you would have heard, but it's a very early stage. So India needs a lot of water, though we have these rivers, but the lot of waters can be produced from the ocean. Then there is a waste management. So if you heard about a company called Waste Management in America, so India also needs a lot to take care of its waste. So I think there are plenty of themes here, and people like you who are investing in India. So waste management is one very critical theme which you might look at.
Okay. Thanks for the elaborated answer to a lot of hunting grounds that you have recommended, right? I have seen the participant list in the Zoom call, and most of us are Indian by culture, right? And Indians have a passion for gold and real estate investment, right? So let's come to that topic. That's
They're
really
blind
important.
towards gold.
And yeah, and even coming back to our theme of this discussion, right? Warren Buffett. So Warren Buffett said that he's not a fan of gold investment because gold does not generate any cash flows, right? That's his view on the gold. But if you see the reality of the gold performance in the last decade, it was not that bad, right? Gold has given a CAGR of 3% in terms of the US terms, and it has given a 9% return in terms of the INR terms, right? So I want to know your view on gold, whether we should hold it or whether we should buy it, and if we have to buy it, how much we should buy it, what should be the reason to buy the gold.
So it's a quest for me also. Warren Buffett bought Barrick Gold and then he sold it. So one of his colleagues would have bought it. So the reason I think Warren Buffett is not buying gold, one is that you just told that it doesn't have the cash flow, but that doesn't mean you can't buy a gold mining company. But the answer is same. A gold mining company, there are at least 4,000 plus gold and silver mining companies. And the biggest challenge with the gold mining and silver mining is it is very difficult to find a new gold mining company. So only way to grow in a gold mining sector is to keep doing the acquisition. So we have a Aura Minerals share in our Aura Minerals company in our portfolio. They just now bought one more gold mining company they acquired. The only way to grow in this segment, you cannot grow in an organic way. You have to grow in an inorganic way. So that is one thing, because every acquisition has a risk, whether it will work or not work. If you remember Tata and Chorus deal, if you remember Tata Motors and Jaguar, it's not easy. So that could be one guess of mine why he's not investing in gold mining company. Gold, so we all understand, right? Second, he has a lot of cash. Now, cash he has for different purpose. It is for making sure that business do not collapse, because in 2008, he did not have cash. So that time he learned that I should always have cash in my portfolio. So that is the second reason he might not want to buy the gold and gold mining company. So gold mining sector is a very small sector. Warren Buffett cannot buy a lot of it because of the problem which he is facing, that the sector is very small. Third, the second reason is that it is not a sticky brand. So people buy it, it's a commodity business, right? So in the oil mining sector, he can buy a large company like Chevron, which you have noticed that he's bought, or let's say British Petroleum for that matter. But the reason in the gold mining company, there are very few big companies and they're all just there. In oil also, we have a huge demand. Today, oil is going up because of the demand, because of the problem which we are facing. Gold goes up in the unavoidable circumstances nobody understands. So that could be his reason. Now coming to me, why I'm investing in gold mining. As we just said that Charlie Munger told Warren Buffett that invest not in the cigar butt, but into the branded companies. And Warren Buffett replied on the special letter he wrote this year that I am not that wishy-washy. that I will just listen to him. So Charlie told him that, Warren, I know you are smart and I am right, and you will do it. So one good lesson I learned here in the partnership is that you don't have to always pester your partner. Tell what you think is correct and give the space to your partner. And after years, Warren Buffett understood probably. So why I'm investing in gold mining? Because I can clearly see that these gold mining companies are able to grow at 15-20%, even if the gold doesn't go up. So Ashish, if gold is still at $800, there is something called all-in sustaining cost of the gold mining or silver mining company, which is 50% from today's value. So even if the gold crashes 50%, what will happen is these companies will not be collapsing. These companies have low debt or zero debt, and their management is a growth management. So in a commodity company, Ashish, the full play is operation excellence. So management becomes the key. If you have a great management, you should invest in the commodity company. So in Denos Shipping, the management was, thanks to management, we made money. In Continental Resources, because the guy called Harold Hem, who is the owner of this company, if you look at the history of the company, it goes up, down, like on the oil cycle. But whenever the oil goes down, this guy buys in tons. He's 70-75% owner of the company. So when he buys, one should buy. So there's a very thumb rule which Peter Lynch told in his book, that you should buy along with the promoters and the employees of the company. So gold mining, we have it because we strongly believe that if the gold goes up, we can make 10 times. And we are not Warren Buffett, we have a very small portfolio. If gold doesn't go up, we will be making at least double the investment and we will learn from it. But we're not going to lose money like crazy, because Eric Sprott is one gold mining investor who has made billions out of it. And he's only been investing into gold and silver mining. So it is a lot of people don't track gold mining, all thanks to them. I think we are able to glue to the gold mining and silver mining sector because we have learned it the way we learned shipping. So by the way, Warren Buffett never invested in the shipping business also, because shipping has a different kind of a risk. We made money over there. He doesn't invest into oil mining company also so easily, but right now he's investing. So all I'm saying is that you need to learn from him how to invest, not necessarily that we copy each and everything. So you should have gold if you believe in gold. I will say a gold mining is a better play. Why we don't tell people to buy a gold mining company? Because we today tell to everybody, don't buy stock on your own. You are going to burn your fingers. Believe me, Ashish, I meet people, they're 50% down. They have lost faith. They come out of the stock at the loss because they don't want to even understand their company. The way you read it on a weekend, or you're not talking to me, that much time people don't even have to see our portfolio, which we are managing for them. So forget about what they are doing, they're selling. So people should have some gold. But one very basic thing people need to understand, commodities are to be bought and sold in cycle. So every 10 years, you have a money crunch, which is going to happen in the next 2 years. If you see every gold cycle, it has come only after 10 years or 12 years. So it was there in 2000, it was there in 2008, it was there in 2020, but 2020 cycle is just started, because before the market would have crashed properly, Fed came and put in the money. So that cycle is still going on. So gold is a good bet right now for against the cash, because inflation is going up. Historically, just now you said that gold is going up by 3%. You are comparing from the peak of 2011, right? But if you look at gold, historically has gone up by 5%. And that is basically the inflation. So gold is somewhere we are all stuck. I went to America and a lot of my friends' wives told me that you didn't bring gold from Dubai. So they still want to buy gold in America. So women are women. And the main reason gold goes up is not because of that. Gold goes up because of central banks start buying. And why central banks start buying? Because somewhere they find that dollar, they start losing the faith in the currency. So M2 money supply is very high right now, Ashish, because Fed has printed more than $13 trillion in a year. So obviously there will be a situation when the gold will have a spike, silver will have a spike. So that is why people should have gold, and 20% is a good allocation, if you ask me.
Thanks a lot for your answer, Bhuvan. It's really a good insight that you have given in this session, right? I want to continue this session, but we are running out of time. But one last question that I want to ask, right?
Sure.
As per Warren Buffett, right, and even I have heard from a lot of investors, right, reading always make them wiser. And they invest a good amount of time in reading, right? So if I ask you, if I ask you to recommend three books to our audience, right? What are those books that you will recommend to read?
Okay. So I will tell you, first of all, one should read their own religion book. This is very important because unless you understand yourself, you cannot understand the books. So see, Ashish, you go to theater, I go to theater. You watch the same movie, I watch the same movie, but we both have different understanding. Yes or no?
Yes.
And that is because maybe you know yourself better and I know myself less better. And that happens because first of all, you and I have to read our manual. And our manual is our religion granth. So all of us should read our granthas properly. We should know how do we perceive things, whether the body commands the mind or mind commands the body, what is the muscle memory, where the mind decides, etc. So one as very, very important thing is we all should read our religious book or spiritual text. Then comes the investing. So how do I take it, Ashish? That wealth is all about Lakshmi. And knowledge is all about the husband of Lakshmi, which is Lord Vishnu. It could be different in different religion, but unless you have wisdom and knowledge, even if you have money. So I'll ask you a very simple question. Whom will you marry your daughter? A fool with $1 billion or a wise man with let's say $100?
Always wise man.
Right? I hope you're not saying it, you'll do it.
He
So
can make the wise man can make $1 billion, right? I'm
absolutely.
assuming that.
Absolutely. And I've been telling people that look who has the highest wealth. The biggest wealth in the world, Osho had it. Puttaparthi Sai Baba had it. Tirupati Temple had it. You talk about today Sadhguru has it. You talk about Ravi Shankarji, he has it. So all the big wealth belongs to these people who are not behind the wealth or money, sorry, because they have the wealth and then the money follows. So that's the first step. The second step you read. So let's say if somebody want to start, they can read this book called Joys of Compounding. I'm going to soon put it on my website. I'm going to take Gautam's interview as well. Gautam has done a brilliant job, Ashish. He has written a book with roughly 30 chapters. Each chapter belongs to different book. So basically you don't have to buy 30 books. So he has saved you time to buy 30 books. That's one. The book I'm reading right now is The Influence. It's a very good book for people who understand how to persuade other people. And it has been recommended by Warren Buffett in 2022. There are many books on our website. We will be uploading the new books as well. People who would like to do investing on their own, they should read. This guy has not been that famous as Warren Buffett or Charlie Munger is. He's somebody who's very dear to me. He's Peter Lynch. I think a lot of money I made, I always give credit to him because of his reading. I could buy those companies. This book is one up on Wall Street. And anybody who want to start the investing, he should read all his books because Warren Buffett did not write any book. And I don't know how many of us can understand his shareholder letter so easily. So these are the starting points. One should, if they can't read the book, they should listen to these people, make a circle around them. Like you're interviewing me today, I will request you, don't stop here. Interview people who are better than me, which will help you to become an investor. Because you will ask me questions which you want an answer. So that's how you will move forward. So I went to Omaha with a quest in my mind that I need answers to my questions. And some of them I got, and some of them I'm still looking for. So I'm saying, go for a quest. Books will help you to learn a lot, because once you read a book, eventually it's a hard work of somebody for years. So you become his friend, because the best thing to learn is to interact with the person who's wiser than us. So like you have taken my interview, I take a lot of other people's interview, and then I get associated with them. They become in my subconscious memory. So I always tell my great clients that even if you give me $1, I'm fine with managing it, because I want to be with you. So I learn from you. So similarly, when you read a book, you become a friend to that person, and they are in your subconscious mind. And once they're in your subconscious mind, you become like them. So I think I give you a lot of elaborative answer, but let me tell you, Warren Buffett answers one question for 20 minutes. One question you ask him, he give you a 20-minute answer. Sometimes it is very difficult to answer in 2 or 3 minutes because there are a lot of context involved in that answer. I hope I answered your question.
Thanks, Bhuvan, for your time and the recommendations, right? As you said, like even this is the first book that I read about Richard Lynch, and we have the mutual understandings. I would say like our thought process matches many times, right? And thanks. It's always a great pleasure and learning from you always. Be in touch, and thank you.
Pleasure is mine, Ashish. Thank you for taking out time to take the interview. I hope all of us learn. I'm a student of investing. I always will be a student. And I think a lot of improvements needed for all of us to become a great human. Once we become a great human, I think the investing is just part of it. So thank you. Thanks to all the viewers for being there. See you soon for the next session. The recording will be available on our YouTube channel. Thank you.